All right, what's up, everybody? I am pumped to interview Clayton Collins, the CEO of HousingWire. I don't know where are you right now, Clayton?
I am on the roof of the National Association of Realtors HQ in Washington, D.C. Pretty
Whoa,
nice little
big
view.
time.
You have to get the Capitol building over my shoulder, but good little venue here.
Wow, what's going on there right now?
So today, the CHLA, Community Home Lenders Association, is doing an advocacy day here in Washington D.C. They brought together a group of their members, mortgage banking executives, together in D.C. to hear from some speakers at some panels and roundtables today. And I think they have some time tomorrow to have some conversations with some of our leaders here in the nation's capital about some of the big issues facing our industry and facing consumers in the housing industry today. So a good fly-in of advocacy from the CHLA.
I think I need to get on the list of that next year. It sounds like a place I should be.
I'm sure Taylor Stork and the rest of the leaders here at the CHLA would welcome you. It's a good group.
Yeah, I got to reach out to Taylor. I have been meaning to follow up on that. So, well, anyways, that makes me super happy to hear you doing that, and
Yeah.
that could actually become part of today's topic because I know the original theme was debrief on the AI Summit, which was incredible. I've said this multiple times as I'm creating content. There was about 520 people at that event, leaders.
Yes, yeah, over 500 leaders joined us in Dallas for that one. Certainly, some hot and key themes going on in the AI world right now as folks seek to find more actionable AI solutions and make their businesses more efficient. As we all navigate into this elusive lower rate environment, everybody wants to be ready.
Yeah, yeah, and it's here. It's not like let's get ready. The game is
Yep.
on. This was the second year of that event, and the first year is like a lot of what I'm gonna do, what I'm
Yep.
thinking about doing, and this year it was what am I doing? And I do think next year it'll be very data driven. It'll be like, here's some data. This is what we're doing. Here's more data. And this is what we're doing.
Yep.
So it's game time, folks. And so as we have this debrief, I do want to debrief from that summit, but things are moving so quick. I even have new takeaways, new insights. And then hearing where you're at right now, I also want to talk about like how we can serve underserved communities, how we can get more first-time home buyers in the market. So where do you want to start on the debriefing the summit?
Let's talk about AI. So, I mean, I'm here in DC with a lot of leaders from the mortgage industry, and one of the themes that really popped out to me at the AI summit was this idea of human and AI collaboration. That takes two lenses, Dave. So there was the lens of the digital twin, and we heard from several mortgage lenders and real estate brokerage leaders that their organizations have created digital twins that employees, loan officers, real estate agents can ask questions to the digital twin in preparation for important meetings, and to make sure that as you head into a strategy conversation, that you've thought through everything that the leader is going to ask. So actually building digital twins to make processes more efficient and make meetings better, I thought was really interesting. And on that same theme of human and AI collaboration, the point was reinforced time and time again that AI is really trying to be positioned inside of mortgage lenders as a force multiplier that elevates human expertise and customer outcomes, not replacing people. But this does mean that the roles kind of change a little bit, and the best originators get to focus on their highest and best use of working directly with clients instead of running some of the manual processes that we know can really eat into productivity.
Yeah, no doubt. And we're seeing that happen both in our industry, outside of our industry. I'll start with something that was mentioned at your AI summit. The chief technology officer of Rocket had shared, hey, we are, AI is outperforming humans, AI voice specifically at different tasks right now. Do you remember
Yep.
the data he shared or kind of the takeaways from that conversation?
I don't have that data on my fingertips right now, Dave. Do you have that on hand?
I actually don't, but I do know
Okay.
that you guys have shared some of the presentations. I don't know if all the presentations have been made public, but I'm pretty sure that one didn't or was. So guys, if you're watching this right now, there'll be a link down below. We'll put a link to actually watch that presentation. And I highly recommend it, whether you're a mortgage executive or you're a loan officer. Uh, really, every presentation was pretty incredibly valuable and insightful. But that particular one, given who Rocket is, uh, like it's game on, like it's happening as we speak. Oh, by the way, Clayton,
Yeah, I
I
won't.
shared a link to it.
Yeah, but I move fast. So yeah, Sean's talk on Rocket's vision for AI, as well as some of the metrics where we did share live coverage that day. So I just dropped the link into the show notes here.
Yeah, but the takeaway is, and we've heard that. I mean, Better was on stage. They had shared how AI is outperforming humans. Uh, I don't know if it was this week or last week, but Mark Benoff at Salesforce, they announced that they are laying off 4,000 people in support and just saying we just don't need as many hands on that. So I think the takeaway should not be fear-based. It should be like, how am I an executive that's creating value? And if you're a loan officer or you're supporting loan officers, it's like, how can I be one of the leaders, one of the people that's supervising AI, that is helping AI, that is having a hybrid communication with the consumer, leveraging AI.
Yeah, it's interesting you bring up Better because I thought that was one of the most interesting conversations when Chad Smith and Ryan Grant were on stage together. I think Ryan had said when Better first approached Neo Home Loans, he didn't really see the match, and then when he saw under the hood and saw what they were capable of at Better through AI enabled sales enablement. He said there's no way we couldn't join forces, and he saw a way to manufacture more mortgages faster, more efficiently, help his people make more money by doing more production. That was an interesting conversation to see the two of them, as business partners, but like kind of approaching the conversation back to the point when they were counterparties and like thinking about doing business together versus where they are today. Interesting insights.
Yeah, agreed. And I actually had Ryan on our show on Tuesday, and then I think it's today, you published an article saying the loan officer's job is gone, but the mortgage originator's job is here to stay, which, by the way, guys, I put 100% off of that. I think price with advice, it's no longer like a good idea, a forward-thinking idea. It's it's here. And I mean, if you're not delivering a borrower coaching experience, if you're not delivering value beyond the transaction, uh, that's probably, you're not going to be on the right side of where this thing is going. Anything else you want to pull out from the AI Summit? Because I do want to get into some uh, housing things, and I want to talk about AI and how AI can help get more people into housing. But anything else you
Yeah,
want?
one of the other big themes is there's a lot of talk about how like easy it is with no code and low code tools to integrate AI into business processes. But at the same time, is that like kind of you can do this too, like this is easy conversation was going on. There was also a theme popping up that embedded AI is significantly drives significantly more value than bolt on or like app driven experiences. So the people that are seeing the greatest ROI are actually embedding AI into their existing processes to accelerate production or accelerate servicing or post close experiences. And while there may be a lot of off the shelf solutions, like true embedded AI does, take some chief technology officer expertise and some real engineering know-how. So there, I would say that was kind of like one of like the conflicting viewpoints I heard from stage about like, hey, this is not necessarily plug and play, but there's like no code solutions, but like the real innovators are building AI embedded into existing processes, and that's where they're finding efficiency gains.
Yeah, well, I can speak from personal experience. I mean, that's what we're doing at Trust Engine. A month ago, we put a chatbot into the mortgage coach experience, what we call the home ownership or the homeowner strategy,
Yep.
also known as the total cost analysis, so that the consumer can interact with it. They can ask questions like, If I'm going to live in the home for 5 years, what's the best option? When can I remove my MI? They can ask it any question they want. And then the beauty is the loan officer is actually getting a transcript of that and a summary of that. So it's just making for more value for the consumer and more value for the worker. You know, the worker's getting more value, the consumer's getting more value. I think that's going to explode. I mean, we're just going to continue to see what is possible with AI.
Yep, absolutely.
So let's again we could talk about AI this whole conversation, but I do want to bring up a topic. I was doing some research with AI. I was actually using the deep research mode of Perplexity, and I wanted to see how many more people would qualify to buy a home if rates drop by 0.5%. And so I said, hey, I'm a mortgage executive doing some strategic planning. You know, what what would happen if rates went down? And the number I got back was 2.8 million households would qualify. And if it went down by 1%, it was 4.6 million households would qualify. But the thing that blew me away is I said, based on today's rates, how many people that are renting qualify? And I was shocked. I mean, that person, I was shocked that it was like 9 million. Uh, any like 9 million people qualify. And then it went on to say the biggest reasons is that there's a misconception of how much they need for a down payment. There's a misconception of what their credit needs to be. And that only 18% of them have spoken to a loan officer or a realtor. So to me, I'm just thinking, I think our industry is not obsessed enough with changing that narrative. What are your thoughts?
Yeah, I mean, less than 2 years ago, rates were 150 basis points higher than where they sit today. And that's like alone, that's everybody who's purchased a house in the last 24 months, essentially, let's go maybe 22 months, is in the money scenario and a refi opportunity. So those numbers make perfect sense to me. How big that opportunity is. And education and awareness is definitely going to be a key component of like who actually goes and talks to an LO and sees if they're refi eligible or if they're in the financial position to be a repeat buyer and get that house in the school district or the block that they want to be on. But it takes really understanding the housing equity that you've built up as a homeowner over the last few years. Despite this high rate environment in most markets in the US, home prices have held their ground and continue to appreciate. So that's the funny part of this mortgage rate lock-in theory, that people get pretty excited about their 3% rate that they have, but sometimes there's some pent up housing wealth and some household desires or needs, whether you're reloading for a job or for school, to really understand what you're financially capable of. And that's where the best loan advisors and the best real estate agents who take an advisory stance and how they help their clients can really differentiate by helping people really understand what their opportunities are. And that opportunity might be stay put, but it might be something different.
Yeah. And to me, the takeaway is we need to go on the offense, like with rates coming down, with the amount of misconceptions they are around home ownership. Like the general public needs our industry more than ever to
Yep.
be more aggressive out there on the marketplace. So, so Clayton, you have become on the board of directors for First Home IQ. I mean, one of our cornerstone missions is to get more Gen Z into home ownership, but really more importantly than to get Gen Z into home ownership, it's to get them financially literate so that they can make the right decisions. They can make informed decisions on their behalf. What was the personal why that you decided to join this mission?
Part of it is recognition of the advantage I grew up with, Dave. I know I've talked about it before. My dad's a mortgage loan originator. And I grew up around it. I've always known the importance of building a strong credit profile and the advantages of homeownership. And as soon as I got out of my New York City days of really expensive apartments and banking jobs, I pursued that dream of homeownership. But I always knew it was in reach. I always knew the steps I had to take to do it. And after spending nearly a decade in this industry leading HousingWire, it always surprises me or informs my viewpoint of how many people don't have that information advantage that I had growing up around the industry. And the other thing that really drives me is the broken and false narratives that seem to carry on. And like someone who I think can be categorized as a geriatric millennial, and part of the generation that folks said would never buy a home or have a job or move out of their parents' basement because we were eating too much avocado toast. And I always laughed at that because that wasn't me, and it wasn't my friends, and it wasn't the people that I knew. But that stereotype carried. And I think sometimes when stereotypes get too much get too much like airplay or get too much attention, they become reality, and people might use a stereotype as an excuse, like, hey, I'm a millennial, I eat too much avocado toast, I'm never going to try to buy a home, why would I even talk about that? I think that's a risk. And if Gen Z, the challenges that they face, I just heard a conversation today about saying like the Gen Zs are using buy now, pay later to finance their Chipotle. And I mean, okay, it makes a good headline. It's a funny narrative, but if it's a reality, stop doing that and learn how to save money and fix your credit score to buy a house. And if it's not a reality, don't let that stereotype define your generation. And I really want to see that next generation get past these like stupid financial stereotypes that could plague them or hurt their long term um, net worth and ability to have a happy and healthy family in a stable environment that we know homeownership does enable.
Yeah. Yeah. I mean, everything you said was part of my why, but another part of my why was that I felt that we could. Like, I really feel like a loan officer is touching enough consumers. They're asking questions about credit.
Yep.
They have a database. They're active in their local markets. That if the mortgage industry could be organized to be more offensive when it comes to financial literacy, like our industry can make just a massive impact, beyond what even a government can make or what a local school or a university. I just feel like our industry organized in a thoughtful way with leaders like you on it, that we as an industry
Yep.
could do something that, the biggest government in the world hasn't done, no state, no national government. I don't even know if there's any universities that have like, okay, you go to school here, you're going to come out with financial literacy. Like you're going to come out understanding how money works. Like, I don't think anybody's cracked the code yet.
No, and I love that frame. We do it because we can. I mean, I think like you, an entrepreneur and capitalist, and believe in the power of private enterprise and free enterprise. And it's amazing what business can do when it sets its heart and mind to something that's harder for other types of institutions to accomplish. So that's a really worthwhile point, that one of the reasons we do this is because we have the knowledge, and the originators that you and I work with and support have the reach to get that knowledge out there to tens of millions of people.
Yeah. And I think I'm more altruistic now. Like when I founded MortgageCoach, I was truly like, I want to improve conversion. But now I'm more altruistic, but I think another good reason we can. And if we do it, we will actually sell more homes and do more loans. And we can, yes, interest rates matter. And as they come down, our volume will go up. But if we can get more effective at empowering people financially, we could actually increase the number of loans. We could have more control over the supply and demand of a mortgage. So that's another benefit.
Yeah, and like it's a benefit that moves in lockstep. I mean, more loans is great for our industry and professionals we work with. More loans also means more people are getting into houses, and if that's the dream, then that's a good thing. It's a very net opportunity.
So Clayton, we're recording this on September 8th. So let's just say we'll probably release it in a couple days. But like we are coming into the close of Q3, prepping for Q4. I mean, you've got a lot of visibility in both mortgage and real estate. What's some of your advice for mortgage executives? Anyone who's listening to this, they're either in leadership, actual executive level, or they're just mortgage leaders.
Yeah.
I mean, what's some of your advice that you have for everyone?
Yeah, so we this is a kind of timely. So we were working on our agenda for the Mortgage Banking Summit, which HousingWire is hosting on October 7th. We are talking through themes, and I had Sarah Wheeler and Logan Moshami and Brennan Nath like brainstorming with me, and we landed on the theme acceleration starts here. And you and I talked about it a little bit in the pre call. I think that starting line is we're already past it. Like we're in we're in the race already. We're starting to see rates cooperate into a zone that we like. We're starting to see some economic data and economic indicators that give us more confidence that there's going to be some Fed action in the next few quarters and potentially a lower rate environment as we look out to 2026. That's supported with an updated forecast from the NBA and Fannie Mae. So watching those numbers closely. But on that theme of acceleration starts here, we think a lot about like who are the lenders that are set up to win in this next stage of the market. And I think we have all seen that there is a group of folks in this industry who have kept building and innovating throughout the last 3-year housing recession. This really tough period where people kept implementing and innovating technology in their businesses, whether that be AI or other solutions. They worked hard on culture and retention of their top team members, and have retained or even grown the size of their sales force. And as we enter this phase in Q3 and Q4, the quiet rumbling that I'm hearing is that the loan originator recruiting cycle is running in full swing right now, and we're back in an aggressive mode where mortgage lenders of all flavors are going after top originators to get ready for the race. And I could argue that it might be a little bit late. Should have been working on that for the last few years. But we'll see. We'll see what comes of it. But the advice that we've been focusing on is making sure that no one's sitting back on their heels, making sure that we know we are in this race right now, and hoping and putting a spotlight on the people who have really focused on building their businesses for a more elastic and efficient loan production process. Would really love to see people double and triple volume over the next few years without doubling and tripling headcount, and see a lot of that flow to the benefit of the consumer and the bottom line.
Yeah, what are some of the sessions that you think are, you don't have to call out any one session, but would love to know, like, what should people look for at the event? What are a few of the sessions you're excited about?
Yeah, so I'm particularly excited about seeing Bob Tyson, who's the president and COO at NFM, talk about the business that they've been building at NFM. Courtney Thompson from CMG is going to be joining us on stage. Emily Gardner from Atlantic Bay. The really cool thing that we have this year at the Mortgage Banking Summit is great representation across lenders of all sizes. So we'll have leaders from the top 5 HMDA lenders, as well as leaders from a lot of the mid-market mortgage banking firms. And they all have different problems and different opportunities. And they're going to be talking about what it looks like to be an originator and kind of the mid-market, as well as talking about servicing strategies and capital market strategies when you're not a top 5 HMDA lender, which we all know that from us and other sources that the top 10 get a lot of attention, and we're gonna make sure we bring insight from across the origination spectrum.
Yeah, well, I tell you, one of the things I'm excited about is that it's also not the same people. Like, Bob is a customer, and FM is a great customer of ours, but I've never seen him on a stage. Not to say has never spoken on a stage. I don't know, but like you are bringing people that have not been on a lot of stages on a stage. I mean, Emily at Atlantic Bay, I mean, great customer of ours. So is CMG. So is New American. I mean, I was actually looking at the agenda, and I think all but one of those lenders has Trust Engine built into their tech stack, but they were all people that I had not seen on stages or at least for a very long time. So kudos to you and your team for putting a lot of incredible executives on stage, but also a lot of new people to share what they're doing and what they're doing to win.
Yeah.
Great job on that.
And we know there's like it's on stage here today at the CHLA event, but there's a lot changing at the moment. And while we have great people on stage, we're working with them over the next month to refine exactly what they're speaking to. So I mean, I think we all saw last week, we saw the trigger leads bill signed. There's a lot of dissection of what that means to the industry right now. And I'm confident that's going to be a major discussion at the Mortgage Banking Summit. Exactly how the trigger leads bill impacts lenders, lead strategies, as well as servicing strategies, because there's some interesting nuance in that bill about how servicers and depository institutions can communicate with borrowers and prospective borrowers after this trigger leads bill. So I'm confident there'll be more news that drops in the next 4 weeks. And if you know our team at HousingWire well, we'll probably be pivoting some of those questions in the days and hours leading up to the stage time to make sure it's as relevant as possible to serve the audience.
Yeah, no doubt. I'm looking forward to that. And actually, we're doing a webinar with Mitch Kiter coming up in a few weeks. Anyways, this trigger bill is very interesting. Not at all surprising, but it's something that really does. It's going to give people are talking about how it's going to give servicers an even bigger advantage than they already have. I mean, first of all, for me, it was no surprise that if you have an existing business relationship and you're servicing someone's loan, that there would be a carve out. And then also not a surprise that if you originated that loan, give it to a service, that there would be a carve out. But at the end of the day, it's up to us as an industry to use data. Because first of all, if you aren't there as the person's thinking about doing the loan, if you're not getting there preemptively with data, and if you're not delivering a really powerful, personal, inspirational, digital experience for that consumer, anyways, I don't know. I think it's an important conversation, but I also think people are not focusing on the right things. They need to focus on how do we win, and we win by using data, by using AI, and master money. So I do encourage any mortgage executive that's on the fence, whether you're going to go to this event or not. It's a really good time to not only see what's on that stage, but to be around other growth-minded, like-minded mortgage bankers. So can't recommend that event enough. And also can't recommend HousingWire enough. I really appreciate all the work you and your team do. You bring a lot of good, I don't want to just say news, but insight, data-driven insight to help us go forward in the industry. Any closing thoughts, my friend?
No, I appreciate it, Dave. I think you and I are, always aligned that, we want to see housing professionals win. We want to see the mortgage lenders win. We want to help people make better decisions faster. And that's what I'm here for. Help people make better decisions faster. And I think we'll serve this housing economy well.
Yep. So guys, go to housingwire.com. It's not hard to find where that event is at. Anything else you want to call out from a HousingWire standpoint? Anything you want people to follow? I mean, you're the number one podcast in the space now.
Yeah.
So what are some of the things that people should follow?
And if you're not following us now, I recommend definitely checking out the Housing Wire Daily podcast. It's hosted by Sarah Wheeler, our editor in chief, and she rotates guests from our Housing Wire newsroom and ecosystem on the show. Often as Logan Motoshami talking about economic data and his forecasts and models. And then the daily update newsletter. We send it out every day with top stories from the Housing Wire newsroom. that impact you as mortgage lenders as well as the broader housing economy. One of the things that people might not know about us is our charge is to serve the entire residential housing economy, and we serve audience members and clients from real estate brokerage to home building. We just acquired a home building publication this summer that's going to have much deeper integration into HousingWire, appraisal, title, mortgage origination, servicing, capital markets, and down the value chain. We believe that an informed industry is a better industry, and you can't win in this space if you just understand your little silo. So we're trying to do it differently, and that's the approach we're taking.
Yeah, well, I love what you do. And also make sure you follow these guys on social media. Logan on Instagram, like pure gold, pure value with a little bit of entertainment. Or maybe Logan, if you're watching this, a lot of entertainment and pure value and data. So anyways, my brother, well, hey, thank you for being on this first Home IQ mission on behalf of Trust Engine and Mortgage Coach. Thank you for just making our industry better. I appreciate it.
Appreciate you, Dave. Talk to you soon.
All right. And everybody, if you have not already, subscribe to the Mortgage Coach YouTube channel. Just click above, subscribe. And if you want to learn more about Mortgage Coach, go to trustengine.com, get a demo, learn more. Take care, everybody. This is a wrap.